Hi everyone. It was not a good day today for the stock market as we gap down and then we're not able to rally past where we did open. So we closed lower than where we opened on the Nasdaq, and that is not good. And on the Russell 2000, we closed lower than where we opened, and on the S&P 500, we closed lower than where we opened, and on the Dow Jones Industrial Average, we closed lower than where we opened. And following the gap higher that we were failed to close higher on the Nasdaq, that's another bad day. But overall, it's not good because it's another distribution day, and now there's we have a churn day here, we have a churn day here, we have a distribution day there, and we have a clear distribution day here. So that's four churn distribution days that have shown up in the past month. So it's something that we have to be aware of. However, at the same time, we are really just consolidating here. We're not even close to the 50-day moving average, much less the 200-day moving average. To say that all hell is going to break loose tomorrow is a bit absurd if you ask me. Still, caution is warranted here, and especially when we got the TVIX, UVXY, VIXY, and VXX near the 50-day moving average. When it crosses above the 50-day moving average, that's a big buy signal. That's a 10%er. So we're getting close there. We have another pocket pivot point buy signal in UVXY. It is not actionable on because, as you can see, we're closing below where we open, but it is something to pay attention to if we do continue to sell off here. I mean, look at DRV and SRS, or DRN, the inverse. I mean, it's just looking really, really ugly over there. And if the biotechs start to follow that kind of action, then I'll start to really be worried. But the ITB and XHB, which were leaders, they're not looking very good. But at that same time, the bank index, I forgot, Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, they look great, you know what I mean? So as long as the banks are moving higher, I don't see why the market can't keep going higher. And on that note today, AMBA looks solid today. Look at Tango off the lows. That's a nice solid day of accumulation. InvenSense continues to make a base, even though it isn't anything great. MDCI bounced off its 50-day moving average. Cores broke out on strong volume. TSM and TSN, more fun with ticker symbols moving. YY, and then remember that speculative MHGC I showed you 2 days ago? Here it is again, or 2 sessions ago, excuse me. Here it is again. This time with a pocket pivot point buy signal, so it's looking good. So it's not horrible, you know, out there whatsoever. However, my biggest problem is, for the first time since this rally started, I've had two clear immediate failures. It has not happened yet during this most recent uptrend. I have not gone long stocks that have immediately failed. But the new long yesterday, ZTS, you would think those 4 days of huge accumulation, you would not think that those 4 days of huge accumulation would have led to today, or excuse me, the 29th. It's now the 30th for most people watching this video, on even lower volume. So that's quite shocking. And at the same end, if you're using the low a day as your final cut loss, UEIC is a full sell. I'm going to be selling 75% because it's still above the 20-day moving average, the magenta line, and above these base lows, which is like the 2586 level. So that's going to be my final cut loss. So it's going to be a 75% sell. But UEIC is basically an immediate failure, and ZTS is a holy shit immediate failure. And before that, we had no new long positions. The day before, no new long positions. The day before, hedges. The day before, no new long positions. The day before, lock in TMHC. TMHC is a 50% sell today, and I'll bring that up really quick. That's closing below the 20-day moving average on heavier volume. The day before that, on the 17th, we had no new longs. On the 16th, we had no new longs. On the 15th, we had no new longs. And on the 14th, we had FIG, and FIG was basically a 75% sell also, and we sold 75% of FIG on the 22nd. So FIG has been a failure. No long, no long, no long. Lock is still working. Team HC has been a 50% failure. Hedge, no long, no long. UEIC, ZTS, failure. That means that now the risk account is only going to be a 2% on a new long signal if it's canceling quality. 1% in the non-risk, no matter what it is, it's not going to be bigger than 1% until the next round of longs start working. And also, if it's not a CanSlim stock, it's only going to be 1% of my capital in my margin account. Now remember, I'm dealing with the large account balances, so commissions of $1 on Interactive Brokers or $2 or $3, however much it comes out to, depending on how many shares I get, doesn't hurt me at all. But if you're dealing with, let's say, a 4 or 5 figure account, then you have to pick and choose your battles a little bit more carefully, and that's what we got to do now. BX is going to be a 25% sell with the close below the 20-day moving average, barely closing below it, but it's doing it on heavier volume, and even despite the bullish tail and still lower low or higher lows, it's going to be a 25% sell. UEIC already went over, 75% sell. TMHC already went over, 50% sell. ZTS already went over, 100% sell. And then CHT, what a disappointment. When I was accumulating this stock back here, I would say that after this long signal right here, I was basically, in my mind, if this was 2003, 98, 99, 2004, hell, even 2005 and 2006, I would be 100% sure, looking at this technical setup right here, that CHT was going to be a huge winner. Welcome to the post-2008 stock market. CHT is still fine, but I tell you what, you didn't have beautiful stock charts that started out with that much accumulation and basically green on the chart turn out like this so quickly. So even from that last signal, we still have a gain, but this is a 50% sell, even though it isn't above the 50, it's still above the 50-day moving average. And the biggest thing is, look at the relative strength line. The relative strength line is hitting new lows. Meanwhile, price is nowhere near new lows above the 50-200-day moving average. This stock is showing some extreme relative strength weakness in this overall market. So by that sell-off, it's got to be a 50%er. And then MNTX would be a 100% sell if volume was huge today and if we closed below 10. But we're above 10, which means that we're above these lows in this base basically here around, as you can see, $9.60, $9.90, $10. So we're only going to do this as a 50% sell, and another close below the 50-day moving average in heavy volume, 100% sell. And then speaking of that, look at this close below the 50-day moving average on heavy volume. That now makes RPT a 100% sell. 75% of it was gone. Now we're going to get out of the rest of it. Only a small loss, which isn't bad. Just like ZTS. ZTS ain't that bad. Not even really a 4% loss, so not really bad. But look at the relative strength weakness in RPT, and that matches the full sell the day before HTA. Ugly, RPT, ugly, and CHT, extremely disappointing. Stocks that are close to being sells, WDAY, a close below the intraday lows here and then 2 days ago, so really a close below 63.25. That's going to be a sell. WAGE, a further sell-off will put it below the 20-day moving average firmly on if it's on heavier volume. If it's on lighter volume, we hold it to the 50-day moving average. Heavier volume, another 25% comes off, especially if the market weakens. And HIMX, a close below the 50-day moving average on heavier volume, is a 50% sell. A close below the 50-day moving average on lower volume, 25% sell, but that's also getting near its cut loss areas. Okay, everyone, good luck tomorrow for me on Thursday. Good luck, everybody, today for most of you.